The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Hello, I'm Brian Akers. I'm a certified financial planner practitioner from Akers Financial Group. And here today with me is Alex J. Monk, a certified financial planner practitioner, also from Akers Financial Group. Good morning, Alex. How are you doing today?
Brian, if you use my middle initial, you got to go with Alexander. It's more regal.
Oh, I'm very sorry, Mr. CFP, Sir Alexander J. Monk. Well, today's show is a good day. It's a good show, and what we want to do is make sure you pay attention to as much of this information as possible, because today's show is this: sleep better on Sunday nights. Have the retirement talk. And what do we mean by that? Well, you can sleep better on Sunday nights, or you can have that uncomfortable anxiety that you have to go back to work. Yes, the retirement talk means on Sunday night, when you know you're not going back to work on Monday, that's how people sleep better. So this show is about having the retirement talk so you can get to that point in your life. We're going to break this show up into 4 quarters. You're going to want to hear each and every quarter. Just like we help you plan for retirement, we plan out each show that we do so that you can give the best possible information, and every quarter counts. Alex, you ready for this first quarter?
Absolutely, Brian, man. This is something we talk about every day. I can't wait.
All right, that's very good. I want to tell a little story to start out with. So this concept, I sleep better on Saturday nights, came from one of my clients. He just recently retired, let's say April 1st. And when he retired, he came in to have a little talk with me. And I asked him how things are going. And he goes, you know what? I sleep better on Sunday nights. I said, that's awesome. I'm going to write that down, because we've always talked about having that every day like a Saturday morning. But, man, the idea of sleeping better on Sunday night because your career is done, you're retired. On Monday morning, you get to pick when to wake up, what to do, and how to live the retirement years. It sounded like a great comment, and I thought that was something that people need to think about, is can they sleep better on Sunday night when they are able to retire?
You know, Brian, something you just said there was if you have to go to work on Monday. And that's what people want to know when they come in and see us. They want to know, can I retire? Do I have to keep working? And a lot of times they just come in and they say, hey, I'm retiring. And I'm like, okay, let's get into that.
Yeah, I begin that talk when someone comes in and says, oh, I'm retiring next week. And this is like the first time we ever met. And I'm like, so I asked the question, what are you here for? And they say, I just want you to confirm that I'm okay. And then before looking at the numbers, I'll say, what if I tell you you're not okay and that we need to do more work before you retire? And then some people have told me, I'm retiring next week no matter what. And that's the idea of the show, is this. We want you to be able to sleep better on Sunday nights throughout all of your retirement years. One of the mistakes that we see is people who believe they have enough money to retire right now, and they don't think about retirement lasting for many years. They don't think about inflation and the cost of health insurance and debts that they still have to pay and other obligations, or even projects that have to get done at their home or other things in their life. So planning and retirement planning is all part of the retirement talk that people must have, and then we can set the actual retirement date. Alex, have you experienced this with a client at all?
So it's a kind of a weird timing, but on Monday, I have a radio listener. She gave us a call a couple years back from listening to the show and wasn't really happy with where she was at before and liked what we were saying. So she's coming in Monday because she does not want to have to go back to commuting every day. So she's saving 2 hours a day under these current rules. And she's like, you know what? I don't know if I want to do that anymore. So she's definitely not sleeping easy on Sunday nights. So hopefully I got some good news for her on Monday. And I think I do, because she's very, very frugal.
Right. So when you think about her and you think about many people that are going to have to report to their desk duty in September, there are people that are financially independent where they're going to need to have the retirement talk to be able to say, yes, I am ready to retire, and I don't need to go back to my desk. I can basically go ahead and retire and hang it up. I don't need to wait another year or two. So those are people that might be in great financial shape. And what we're going to do today is when we talk about the retirement talk, we're going to talk about those habits of people that can have that retirement talk and then they get the thumbs up, full steam ahead. Have you had some of those, Alex?
Yeah, it's a great feeling when you get to tell somebody, quit your job. You don't have to work for the money. If you're stressed, if you're not happy, if you're losing sleep over it, you're out of there.
It sounds like a good thing to do, but what happens many times is that that's not the answer right away, is it?
No, and a lot of times, and I tell people in the beginning when we meet, I'm not here to make friends. I'm here to help you win in retirement. And sometimes just the truth isn't what you want it to hear. I mean, I've had a lot of people that come in and their expectations are just not realistic. And the numbers are getting big. And I mean, things are just inflating and the numbers get big over time. So people have this kind of wealth effect, or they say, oh, my 401k is $1 million. I can retire at 58 or 59. But there's a lot of big things you got to look out for. You got to look out for inflation. You got to look out for volatility. How are you going to get to your money? Taxes. There's so many things. It would be foolish not to bring an expert in.
Right. So what happens is that people want to have the retirement talk. So they give us a call at 833-WIN-RETIRE, and we have that initial talk. That initial talk will begin a process of about 3 or 4 meetings of evaluating where you are. We call that your financial fingerprint. And then we take your goals, your objectives. We take all the data that you can provide, and we put that all together to then show you what we think retirement would look like with all the numbers in place. And then we talk about, what do you want to do with your budget? What are you going to do in spending? What other objects are important to you? What are the things that you need to purchase before you retire? At work, when is the best time to retire? Is there a certain time of year when you receive a stock bonus or a regular bonus? Do you earn extra vacation days working into the next year? There's a lot of different variables that come into the retirement talk that says, yes, you can. And then the next question would be is, when are you ready? And that's all about financial planning.
Absolutely. I mean, Brian, I know you've heard this before, but how many people come in and they say, well, I'm getting ready to retire, and as soon as I retire, I'm going to pay off my mortgage with my 401k and be done with it, and I won't need any money, really. And then they realize how much they need to pay it off.
Yeah, and like if they have a $100,000 mortgage, do they need to only take out $100,000, Alex?
No, they're going to need to pay Uncle Sam because he's got his hands out.
Yeah, because one of the things that people need to realize is that usually the retirement year is going to be one of their highest tax years of their life. And this affects many, many things. A very high tax year, especially the year you turn 65, can trigger higher Medicare premiums if you're married filing jointly and your income goes above 170. There's a lot of aspects people don't know when you take all this income in one year and how it hurts. If you take a large lump sum to pay off a mortgage out of a retirement account, you no longer have the retirement account. I call that eating the cow. You also have to pay the tax on it. So like $100,000, you might need to pull out $130 to be able to get $100, and that would be someone in the 22% bracket. But if you add $100,000 to your current income, you might be pushing into the 24 or maybe even to a 32% bracket or higher, depending on where you are with your current income. Also where you are when you retire. Some people retire like mid-year and they might actually get sick leave. They might get a lump sum of their sick leave they didn't use, and that triggers high income tax too. So we'd rather pay the mortgage off over a 3 to 5 year period instead of doing it all at once when you get that question. And so we try to do a thing called tax levelization. Make sure people are truly understanding what they're paying in tax, and let's not pay any extra tax by trying to do something all at once.
So you're telling me, Brian, you don't want to pay more taxes? I don't understand.
Yeah, I'm not a fan of paying extra tax. It's like going into a store and saying, hey, I have the opposite of a coupon. I want to pay more. I want to pay 5% more, 10% more, because I just want to today, because I'm in a hurry. Don't be in a hurry when it comes to your retirement. We need to be able to have the retirement talk, which involves you and your information and your financial goals. And then we got to talk about cash flow and what's going on with everything that you're doing in your life.
And I want to go back to something you just said about those Medicare premiums and other things that may come up because of poor planning or just the way the year works out. If you start taking big withdrawals to pay these higher Medicare premiums, your first year, and you take a withdrawal that's way over your expected withdrawal rate, that can be a devastation for your retirement long term because of the way the math works out.
Absolutely. Can you imagine if, let's say you choose to retire July 1st this year, or one of those kind of dates, and you retire, and then what happens is the stock market goes down, and it goes down. All of a sudden, you take a large withdrawal like that, and the market's down. You've doubled that amount of loss in the core portion of your portfolio. So there's a lot of aspects to timing retirement that you really got to make sure you think about.
Yep, and you got to know where that money's coming from because you do not want to get caught off guard, especially early in. Those are the most crucial years.
Absolutely. What we typically do is we want to set aside at least 1 year of income in a very low-risk account that money can then provide that income so that you can work out the other income flow and other needs throughout your first couple of years of retirement. Those all are things that affect how you take your money and make that money last a lifetime. At Acres Financial Group, we believe that in retirement, the biggest worry of your day should be where to drink your morning cup of coffee, where every day seems like a Saturday, free of stress. Your retirement income or investments are all taken care of by the team of advisors at Acres Financial Group. If this is the future you want, it's not too late. We want to provide that kind of retirement for you. Begin by calling us now at Acres Financial Group through our phone number at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, leave us a voice message, and Susan will call you back on Monday to schedule an in-person meeting or a virtual Zoom or even a phone meeting with one of our team of advisors. Start planning for your retirement now. Call 833-946-7384 or visit us at acresfinancialgroup.com. Will you be able to retire and stay retired? We will explain in the second quarter.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back. I'm Brian Akers, and here with me today is Alex Monk. We are certified financial planner practitioners that work with Acres Financial Group. We want to welcome you to our second quarter of our show. The show today is called Sleep Better on Sunday Nights. Have the retirement talk. What do we mean by this is the following. You can sleep better on Sunday nights, or you can have the uncomfortable anxiety of basically having to go to work. Have the retirement talk now just to see if you're ready or almost ready or in a good path heading to that day when the financial advisor across the table says, yes, let's go ahead and plan that retirement date. And yes, things look good for your future now and to the future that we really don't know how long it'll last. And that leads to the question that we start off the second quarter, Alex, and that is this question. Will you be able to retire and stay retired? How important is that kind of question to you, Alex?
That's a big one, especially if you burn all the bridges when you leave your last job, go out in a blaze of glory. And then you're like, wait, just kidding. So it's something you definitely don't want to do.
What happens is some people say we're going to work a part-time job to make up the difference, and that'll help us be able to actually make it as we start. And my comment usually is the highest paying job you have is the one you have right now, So why not work an extra 3, 6, maybe a year and finish up all of those things that you need to finish, all those debts, all those savings, all those goals that you have, and maybe wait just a little bit longer to where the numbers work out very, very well. So patience is a key on when you want to retire. And then the second part is this, of that question, is you want to retire and stay retired. That means we don't want to have to go back to work maybe 5 or 10 years into retirement because maybe you retired too early and you're a little short on money and you're not keeping up with inflation. So Alex, what's your thoughts when it comes to retirement planning? You're having the retirement talk, and you sort of know they're going to go short, but they really want to retire. How do you cover this concept of retiring now and just making sure this money will last?
And it really depends, Brian, where they're at, like how far out they are, or, how far they are away from that finish line. Because 5 out of 10 people I see are like, we've been meaning to do this for 3 years. We've been talking about this for 5 years. The closer you are to retirement, if your numbers aren't there, it's very difficult to make that up. Because saving, like you said, Brian, it takes time. It takes good habits, knowing how to save, where's your money, and then letting that money grow is really, really important. So it's a tough talk. I mean, I think 3-4 months ago, I told a client, I said, look, if you ever want to retire, you got to sell the house. They were in a house that was just way too much for them to begin with, but to keep it in retirement was just not possible. And those are the tough conversations that we have to have. I mean, I don't want clients to feel good and have to go back to work. I want them to know the truth so that they can get what they're looking for out of retirement.
Right. So the process that we try to recommend that people go through is their financial fingerprint. And that is, where are you now? What are your assets? What is your cash flow? Do you have a budget now? And have you thought about a retirement budget? Like, what do you need during your retirement years? Now, yes, you're going to be spending less money. And yes, you will not be paying Social Security tax anymore, and you really won't be saving for retirement. So you don't really need 100% of your income to replace, but you will need between 70 and 80% of your income in general to try to replace that. So as you're starting to do financial planning, you got to sort of set that cash flow requirement for the budget. Now, one of the things that I find hard to do is if you have a lot of fixed costs, a lot of debt, a lot of payments going out the door, it's a lot harder to retire because you then have to have the assets you have fill that back up. Now, typically, someone that has a lot of debts, usually their only savings they have would be their retirement plans. They don't have other cash. They don't have other liquid investments because they maxed out their spending for many years. So it's a tough habit to see a spender and try to figure out what to do with them when it comes to retirement, right?
Absolutely, and the math is very difficult. We reference most of their monies in pre-tax accounts or saving to their work plan because that was the only way they were able to save, is just not see the money. But then we have a huge burden, and that's the taxes. And if you have, like you said, that big monthly nut that you have to meet before you do anything fun, you have to add the taxes on top of that. And as you keep going up the expense ladder, the numbers get progressively bigger. And as we said in the first quarter, big withdrawals in the first year can really, really hurt the longevity of your money. So the reason you want to start having these conversations is so you can plan for it. Have you ever tried to eat an elephant? I think it's illegal, but they say you have to do it slowly, or what do they say?
One bite at a time.
Bum. You're welcome. So yeah, I mean, and there's other ways to have money work for you, Brian. It's not just risk. Some investments, like some types of different annuities out there, the longer you defer them, the higher your payouts. So that's another way to have your money work for you and grow over time, taking a different type of risk.
Right. The risk you're mentioning there is longevity risk. And so when we talk about are you able to retire and stay retired, there's two parts of the cash flow. One is knowing your budget, what's going to go out the door. Then you need to create what's going to come in the door. Now, you could have what's coming in the door be guaranteed, protected, and something that might have inflation riders or cost of living and some that might not. But you need to understand what options you have. We have found many people have been sold investments throughout their career, and they don't know how they work. They don't know how they all come together. Because people that, like insurance agents, stockbrokers that have sold these variable annuities, fixed index, other kinds of vehicles to clients, sometimes they no longer are around. And so when we're working with a client that has a collection of investments, we take that all together and we say, well, this is what this investment will do, and this is how we'll turn it on. And so we can create that flow of money. We need to have income flow to cover fixed expense. We then have to know what the budgets are. We got to make decisions on how to pay off debt. Yes, we want you to pay off debt so you have lower costs of living to the future. By retiring and staying retired, what we mean by that is this. You retire, you stop your job, you relax. Now, when we're home, we start seeing things that need fixed, things that need repairs. And before we know it, we start creating a to-do list or a honey-do list. And before we know it, that bill gets bigger, bigger, and bigger. And you got to start planning out projects and organizing the purchasing of a man garage or whatever else you need to do to make sure retirement years be the best it can. But then that costs money. Maybe that wasn't in your original plan, and that might be a reason people start going back to work is to provide for certain needs. There's a lot of things involved in financial planning when it comes to your retirement.
And we cannot help you get out of Home Depot under $100 because everyone knows that's impossible to do. You go in that store, you're spending at least $150. I mean, one 2x4 will push you over the limit these days. And you said earlier, man, about cash flow. That's another big anxiety people come and they have. It's like, okay, Alex, this is where all my money is, but how do I get it? It used to just be, I signed up for direct deposit with my employer. Every 2 weeks, I got a check. And now they have to refigure out, where is this money coming from? How should it flow? And that's probably one of my favorite parts. I love the puzzle, the logistics of it. It just really makes sense in my brain, but I do it all the time. Most people don't.
Right. So simply what happens is that when you retire and you have retirement savings, maybe that's IRAs, Roth IRAs, 401ks, TSP, you need to create a way to take that money monthly, and you got to figure out how much tax to take out and get the net put in your bank account on a certain day to cover your normal flow. We have clients where we set up the ability to take 2 withdrawals a month, just like they're getting paychecks before, because they lived very well that way, so we kept it that way. But many retirees live off of 1 payment a month or 5 payments a month. They just come in just a monthly check. So really adjusting this cash flow and then getting used to it takes about 2 years as people enter retirement, so they know that everything's okay and they don't have to even think about that, where's my next check, because that is a very important worry that people might have at times.
How about the person that comes in and they're a spender, right? They're spending, and they say, hey, when I retire, I'm going to cut my budget way back and live a real simple lifestyle. I always giggle because I'm like, look, you spent 35 years developing these habits. It's not going to be that easy.
Absolutely. I think about some of my highest earning clients, and they do extremely well. And then we have a serious talk about how can you dial it down at retirement? And I tell them I don't think they're going to be able to dial it down as far as they think they are, and that they got to save more money. Now, the hard part in retirement plans is you might be limited to putting $26,000 a year away at your retirement plan, and guess what? That might not be enough to keep up with a $200,000, $300,000 a year income. There is lots of other ways to save for retirement, but you have to plan with your abilities to save. You got to learn a couple things. One of the biggest things that people need to learn is to learn how to live within their means, save money for their future now, no matter what age. Make sure you're doing that. Now, Acres Financial Group, we're a local, independent financial firm. And what we try to do for people is this. We report to you, the client, not to some big company on Wall Street. We do have offices in Lutherville, Forest Hill, and we meet people throughout Maryland and throughout the country through many different ways. If you like to sit down and talk about winning in retirement and have that retirement talk, give us a call at 833-WIN-RETIRE. That's 833-WINRETIRE. When you call, you can leave us a voice message, and Susan will call you back on Monday to set up a meeting with one of our team of advisors. Start planning for your retirement now. Call 833-946-7384 or visit acresfinancialgroup.com. Do you know where all your money is? Do you know why it's there? We will talk about this in the second half.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers, and here with me today is Alexander J. Monk, CFP. We're both certified financial planner practitioners from Acres Financial Group. Today's show is called Sleep Better on Sunday Nights. Have the retirement talk. So what happens is this. You can sleep better on Sunday nights, or you can have that uncomfortable anxiety knowing you have to go back to work because you haven't had the retirement talk. So have the retirement talk now. So this is a show about the retirement talk. Each and every quarter is designed to cover different topics. Just like we do in solid financial planning when it comes to retirement, we do the same thing in designing our shows each Saturday morning. We want you to know that every quarter counts, and the retirement talk is something that you need to think about no matter what your age is. All right, Alex, we're starting here in the second half. Are you coming out of the locker room ready to go again?
I got to get the orange out of my teeth. I was hitting those orange peels pretty hard at halftime. Whew, they're good, though.
All right. I'm sorry. I have no comment for the orange peel. I guess you're one of those kids that were born much after me. Back when I was playing, basically, you're lucky you got to sit down at halftime. They usually talk to you in a high voice way, and then they get put back on the court. It was usually an aggressive halftime, and you run back out. Back in the, I guess, early 80s, they didn't really, I guess they gave us water. There was no fancy Gatorade, anything like that. But we had to come out strong. All right, well, we're going to come out strong here. We got a great topic for this one, and that is this. Do you know where all your money is? And do you know why it's there? What do you think of that topic, Alex?
Of course, people know where it is. It's in the retirement date fund that coordinates with whenever they want to retire, and it's just taken care of, right, Brian? I mean, that's the way it works now, I'm sure, right?
I'm hearing sarcasm. I'm a little worried that some people blindly think about retirement, and they have not really thought about retirement. They check a box when they get a job rather than reading and understanding what they have. If you can't understand it, have a coach. I think having a financial coach takes the best financial mind and he makes it even better. We have clients that are extremely sophisticated and they can do things on their own, but when they have a coach, they do things even better. And that's what makes the superstars, I believe. Right, Alex?
Yeah, and you need to understand at least the basics of what's going on with your money. Because if you have no real core understanding, how are you supposed to judge what it's doing? Is it achieving your goals? Well, I mean, if you don't have goals, that's got to be a tough thing. Do you know what type of rate of return you need to sustain your retirement? Is it 5% average? Is it 10? Because if it's 10, that's troublesome. I know we've been seeing some real big return numbers, like the 10-year returns are huge, the 1-year returns are very big, but the long-term returns of the market are we got to get there somehow. So when we revert to the mean or we bring the average down, it has to be a negative number. And we know that's going to happen. So we have to plan for it and we have to be prepared for it.
Yeah, so you just covered a lot of different things there. Okay, the sarcastic comment about the target date funds. I have a little story about that. Let me start with that one. I had a 37-year-old come in and we were reviewing their plan, the only one provided at work, and we're looking at it, and she checked the box for a retirement account. And at 37 years old, they had 10% in a stable value money market, and then they had another 20% in low short-term bonds. And I'm like, I disagree with where they have your money. And then we talked about the options they had. I mean, she was just starting into her retirement plan, so we're starting at maybe a few $1,000s. I truly believe that dollar cost averaging into the stock market for someone who has 5, 10 years or longer is something that you should go pretty much all in with your contributions into the market. And so as we build and grow, you got to understand what options are at your work. What's happening at work for a lot of people is the 401k plans are changing. There are companies that have been buying out other companies and consolidating. You've seen a lot of consolidation in the 401k market, and your choices are changing. You need to know what those choices are. Have your advisor sit down and go over it with you so that they can give you the advice you need. That person that's attached to the 401k plan works for the 401k plan. They're typically not your advisor. They're not someone that's going to be there to talk about your whole plan and build a portfolio that fits you exactly. And that's what a financial advisor does for you. Right, Alex?
And knowing what to expect is a big deal. If you have no clue what's going on and you turn the news on and things are, the world is ending, whatever may be going on, if you think that's like, your money's going to just go away forever and you sell, that's the worst thing you could do. You want to be buying that. So that's the mindset that we try to get our clients to shift to, because I sit down in a lot of meetings, especially with new people, and I ask them, do you think the stock market will go down at least once in the next 20 years? And pretty much everyone says yes. And then I say, okay, so we can agree that that's going to probably happen. Why would we panic when it happens? Why would we try to not prepare for it? To me, it doesn't make sense. It's like, you got this stuff coming up. We got to deal with it. And the further we push this retirement talk under the rug, the harder it is to make it what you really want. And in my opinion, if you're going to work hard, you need to be able to enjoy the later years and enjoy what you've worked so hard for. And a lot of people aren't taking that responsibility, and that's where we come in and we say, hey, look, if you want us to hold you accountable, I'll do it. I love yelling at people. Not a problem. Do it all the time in the car. So if that's what you need, we can do that. Sometimes it ends up like a counseling session. I mean, you never know.
All right, so as a disclaimer, our goal is not to yell at people. We want to support them, coach them, motivate them. All right, so don't scare people. All right, so let's talk about this. All right, so no matter what age you are, if you have a job, go to your employer and find out about the retirement plan. Let's keep this real simple. Get into that retirement plan. Go ahead and put money in. The first answer is this. Hey, Mr. and Mrs. Employer, what happens if I put money in? Do you guys match it? Whatever they say they match, 3%, 4%. We saw 9% this week as one company matches. What you should say is, I'm putting in the match. Maximize your match. First thing you should do, sign up, get online, don't put it off. It'll never be a better day than right now for you to get into that plan. The only way to have the retirement talk in the future is to start investing your money now. And you got to invest it for your future. Depending on your age and time horizon, you'll look at your aggressiveness. And then the opposite is true as we get closer to retirement, that we got to look at how aggressive is your portfolio. If you're all in on the stock market and you're basically looking at a retirement date that's coming up here very quickly, you need to gear it down, slow it down, start to diversify. You need to think about what other options are available to you when it comes to your portfolio, and do they have lower risk options, and understanding what's out there. What do you do in this kind of situation, Alex?
And I try to stress just how risky it is. Because a lot of people come in and they just don't know how much risk they're actually taking. And, that can be a function of a ton of different things. But I ask them, I say, okay, if the market goes down 30%, are you okay with losing 30% of your money on paper? And how are you going to react? Typically, they say, oh, I don't want that to happen. I'm too close to retirement. I say, all right. Well, then it sounds like we need balance. And then they say, yeah, we do. But it's a hard thing to do because money can be a very mental thing. If you see things going up, it's like, oh, I want to be in on that. If you see things going down, you don't want to be in that. So you got to have an idea of where all the money is, understand what that means, and see how you feel about it. There's no right answer out there. Everybody's different. And as long as your plan achieves whatever your goals are, that's the right plan for you. But it's not going to be the same plan as your neighbor. It's not going to be the same plan as your brother, your brother-in-law. You got to do it for you and for your family.
Yeah, and so what happens is that it leads to many decisions, and there's an important decision there. And typically at 59.5, a lot of companies offer in-service withdrawals. In-service withdrawals is the ability to roll over some of your retirement savings into an outside IRA, which is, we make sure you do it properly, make sure it's a direct rollover to an IRA. And this is a way to diversify and to provide some fixed policies that are guaranteed annuities, guaranteed contracts for the money that needs to be protected into and throughout your retirement years. So this might be a moment, if you've had that 59.5 birthday, to think about, I want to slow it down, the market's high, I need to gear back, have some protected, and these are some of the options that are out there.
It sounds like taking profits off the table. I always like taking profits, Brian. That's one of my favorite things to do.
I love when there's profits, so taking them out and rebalancing, very important. A lot of times when people are retired, the market's up, we do take the profits, fill up the money markets to make that money last throughout their years. So this quarter, we've been talking about where all your money is, and do you know where it is? Do you understand your retirement options? Do you understand what kind of risk level you're taking? Do you know what you've bought over the years? Do you understand how it'll work in your retirement? At Acres Financial Group, what we do is we sit down with you and go over where you are. We call that your financial fingerprint. We want to understand how and what you've bought over the years, invested your money, so that we can then create an income plan that's going to help you make this money last a lifetime. Designing that portfolio, designing the investments that will take the appropriate risk to your future is a key ingredient. The second part of that is designing the retirement income that fits the budget, deciding on withdrawals to pay off debt. Making all these decisions along with other full financial planning is extremely important, because we want you to be retired. And by being retired, you get your own time back. You get to make your own decisions on things. You get to sleep better on Sunday nights. All this comes together in a retirement plan. So go ahead and give us a call at 833-WIN-RETIRE. When you make that call, we'll set up a free time to talk with one of our team of advisors. All you got to do is call 833-WIN-RETIRE. That's 833-WIN-RETIRE, and talk to Susan and leave a message. If you don't, I'll hear Susan right away. And schedule a phone meeting, a virtual Zoom, or an in-person meeting with one of our team of advisors. Call us at 833-946-7384, or go to our website at acresfinancialgroup.com. You may want to retire, but does your money agree? We will explain in the fourth quarter.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back. I'm Brian Akers, and here with me today is Alex Monk. We are both certified financial planner practitioners from Akers Financial Group. And today we've been having the retirement talk and doing this. A basic idea is this. We want you to sleep better on Sunday nights when you retire. We want you to know where the money's coming from and be able to understand how that money's going to last your lifetime. Now, our show, we take this show and we take the recording, we put it on our website. You can go to akersfinancialgroup.com, and on the website there, you can see the radio tab. You hit that, and then you can see all of our previous radio shows there. You can listen to those topics that we've covered. You can listen to even this show next week on our radio tab at akersfinancialgroup.com. So make sure you go and check out our website. On there is information about all the advisors and our staff and our company. You'll find out information about the radio show, and then, of course, our webinars that we've created over the past year, and, of course, a little bit of information about a retirement expo that we're working on for September, which will be something to be excellent for people to think about attending. Yes, it'll be in person is the goal. All right, here we are in the fourth quarter. And Alex Monk, I have a question for you, and it goes like this. People might want to retire, but do they know where their money is, and does the money agree with them? Have you ever had this kind of situation in financial planning with your clients?
I would love to tell you no, Brian, but it happens all the time. People, they come in and, we have the story and I want to retire. I know how much my mortgage payment is. And then about 45 minutes into the talk, it's like, I think I might have had a pension from so-and-so 25 years ago. And then, I picked this up along the way. So slowly but surely, we got to figure out where are all those things that you got as you travel through your career. Make sure we don't leave any of them out there. And then look at all of them, because some of the things that you may have from years back might be something that you can't go back and get. So it's a good thing. You're going to want to keep it. Just figure out how it's going to fit your plan. Some of the stuff might not be the best thing. So you got to look at it, and it's different for everybody. I had two clients, both worked for the same company. One of them took the cash balance pension option, and it made more sense for him. The other one, he took it as lifetime income. Same company, same job, almost the same amount of time, but the answer was different for each of them. And that's where you really got to sit down and figure out, how do I make my money do what I want it to do? Not what some target date fund is telling us, or, whatever a book says. You got to figure out what the purpose is for this money, and then make it go to work for you.
Yeah, I've had a couple talks in the last 6 months, let's say. Basically, they say, well, I've been told just to buy an index fund, and that would be my answer for everything. And I'm like, an index fund is like a good starting point for someone just getting ready, but it can't be the only source of your retirement diversification. You need to seriously have a very well-diversified portfolio to handle all the things that markets can give us. And I try to remind people who are saying that you need to look at 2000 to 2010 on the S&P 500 index, and you'll realize that was a negative decade. Can you imagine having your money in an investment that was negative for an entire decade, and then that is your main core investment? That would be something that'd be very hard to retire on and take money from. It doesn't always fit. You got to build a plan that fits for you. So when we talk about does your money agree with your thoughts on retirement? Now, there's two different kinds of people that I will try to mention. One is one that's so low risk that they have all their money sitting in savings, and they'll come in and we'll talk about where's the best way to get 1.3% interest. And I'm like, you need to stretch your risk. You need to take more risks. There's great companies out there to pay good dividends. There's solid other investments to add to your portfolio to raise that return to 2.5, 3, 3.5, 4, or even higher, depending on how you diversify. And so you have the low risk one that needs to push it out because even no matter how much they have saved, it's not enough to provide income off the interest or dividends if you're really not earning any interest. And then we have the opposite person, which is, let's call them like a day trader, and they have a lot of money in the market, and they just don't want to stop with that. And so what happens is you got to have a balance and try to say, take some money off the table, make sure you have your financial stability there for your family, and then you can have an account where you risk money that you could afford to lose. And that's sort of how you try to balance. So when your money agrees with your retirement, that's a well-diversified portfolio and a financial plan that's designed for you and your family for a lifetime, not just for this year, but to look 12 years down the road when things might cost almost double. Can your money handle that? Understanding these aspects are very important when you're getting ready to have the retirement talk.
Especially if you need a new roof and you got to get new plywood, and that stuff's like gold. I mean, the way things are going, you need to have stuff that's going to grow past a 4% annual inflation rate. So let's say that inflation ends up getting to, for round numbers, let's call it 4, and your portfolio does 6. That's only a real rate of return of 2%. 2% is not going to get you across that finish line unless you've saved a ton of money. So you got to have things that are going to hedge currency risk, hard assets, commodities, all types of different stuff, international stuff. It's like recently, as there's fears in the U.S. of inflation, is this headline, the international markets rise on that type of information because that's good news for them, which is bad news for us. So by having that mix, you're able to, I guess, flatten out the line of your portfolio, take the volatility out a little bit, make it a little bit of a smoother ride. You don't want a retirement where you're getting car sick all the time watching your portfolio swing around unless you know what's happening, and that's the goal.
All right, so I've been noticing a lot of your examples on inflation are tied to wood prices, lumber and plywood. Inflation involves so many things in life, from gasoline to food to even your home and auto insurance. It seems like many things have really jumped up when you look at your regular budget. So when we're talking about having the retirement talk, and so that you can retire and be able to say, just like my client did, that they sleep better on Sunday nights now, and that's because they're retired and things are good. They don't have to go back to work and maybe work a job that has more stress than they really should have or need to have. And sometimes people with the pressures at work, they sort of try to retire a little too early. Having the retirement talk in your future, you need to be ready for that. One of the best things you can do is to work on paying off all of your debt as quick as possible. We recommend not having much debt at all, or zero debt if you could, and that would basically create a very positive cash flow budget, which would then be very easy to say yes to your retirement, and to be able to have a retirement talk that's, yes, let's go ahead and start tomorrow. I had a talk like that yesterday with a client. I said, well, what is your plan on work? What is your exit plan? When do you want to retire? Because you guys have saved enough. We need to just balance this out and make sure you're in good shape, but you're in good shape to retire whenever you're ready. They are absolutely financially independent, which is a nice place to be. And that's why many of our clients are savers already, and that's why we help them become better savers. Trying to transition a spender to a saver takes work and takes them to really commit to making that big change in life. And that's something we all can do, and it's something we all need to do, is to learn how to become a saver so that you can have a retirement talk and you'll get the yes that you've been waiting a lifetime for.
All right, Brian, I'm going to put one on the tee here for you. Let's say I'm so-and-so client. My mortgage guy called me and said I should take out a 30-year mortgage on my house because rates are so low. That's good type of interest to have, and I should invest all the money.
All right. So when you get that call, I then review their income stream and can they afford the mortgage. And my answer is many times no, because they're going to have to take more and more money out and pay all the taxes to then pay the mortgage that they didn't really need in the first place. Now, this also means that they're taking their asset that they live in and then taking a lot of risk with it. That risk is a stock market that could easily pull back 10, 20% or more at any point in time. And how do you pay a mortgage when the money disappears? You don't, is the answer. I believe retirement should be the lowest risk way to reach your goal, not a high risk way. So if you get that call, the answer is just say no.
I agree with you 100%. And I try to explain to people, I know that someone told you along the way that this is good interest to have, but just because it's deductible doesn't mean you're not paying all that interest to somebody. So you save 20%?
I had someone do that, came in and go, oh, I got a mortgage. I want to invest that money. And I said, well, how much money was it? And they tell me an amount. It was relatively low, like $100,000. And they said, well, this interest is deductible. I said, you don't have enough interest to be deductible. To itemize, you need like $25,000. So when it comes to the situation, there's things that people are sold during their lifetime. There's things that they invest. There's places they work. There's lots of choices in life. You need to understand that they all come together in the retirement talk to say, yes, you're good to retire. We want the least amount of risk to reach those goals, not the most amount of risk. Alex, thank you for a good show today. Thank you, everyone, for listening to our show. But we want you to do this. Give us a call. You need to give us a call at Acres Financial Group. Call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. And when you call, leave us a voice message, and Susan will call you back on Monday to schedule an in-person meeting, a virtual Zoom, or a phone call with one of our team of advisors to talk about your situation and to have that retirement talk so that your retirement looks like that. It looks like you can sleep better on Sunday nights. So go ahead and give us a call or visit acresfinancialgroup.com. Thank you for listening. I'm Brian Akers from Akers Financial Group, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of Akers Financial Group. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated and investment advisory services through Kalos Management Incorporated. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Advice given on winning in retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment.